Thank you. And good morning, everyone, and welcome back from your extended long weekend and to the May 19th edition of the Quaranteam Chats. I don't know about how you guys feel, but I feel pretty refreshed after that long weekend, a little bit of sunshine, a little bit of actual family time. So it's really nice to be back and chatting with you guys. It's always dangerous to do a webinar on the Tuesday after a long weekend because everyone's in a squished week. So really thankful for those of you who are joining on, that you've made this part of the beginning of your week. As we get into the flow of things here, I just want to give a special shout out to everyone who's joining us on Facebook Live and on YouTube. We do get a lot of people who are following and watching on those channels after the fact. Just wanted to invite you to come and join us live. You can go to entreflow.com, find the Join Quaranteam Chats link. It's right on the homepage, and that'll take you to the joining details, registration page, etc. And you can also see recordings of all the past Quaranteam Chats, notes and links and everything for each one of them by clicking through this link. Great resource. Today, we're going to go through sort of our normal agenda here, which normally starts off by running through the news, any latest updates. We're going to have a few key tips about raising in this kind of environment, and we're going to get into the early data on what we're seeing and some sentiment stuff. As we go through, so this is meant to be a chat. So we do encourage everybody to ask questions. And you can do that in 3 different ways. I'm sure we're all getting used to Zoom here. First things first, if you want to put a question into the chat, make sure and change the setting from, it defaults the chat setting at the bottom to all panelists. If you could change it to all panelists and attendees, then when you send a message to everyone, it'll come up for everyone and not just the attendees. So why don't you go ahead and do that and just put put a little hello message into everyone on the chat message. And if you want to ask a question there and have everyone see it, that's a great place to put it. Second thing is you can raise your hand, and we're absolutely happy to have other voices speaking on this call, so it's not just me and Helena and our special guests. We'd love to have your voices be part of the conversation as well. So just raise your hand, we'll unmute your mic, and you can jump in and say your piece or ask your question. And then, of course, the third thing is if you hover your mouse over the bottom or the top of the screen, depending on how you've got it set up, you'll see the Q&A function. And we'll be happy to answer questions as they come through in the flow. Hey, good to hear you from you, Christine, and good to hear from you, Janos. Thank you, and hi, David. Thanks for joining on, you guys. Let's get into it. So I'm Ian Rogers. I'm the founder of Entreflow Consulting Group, and joining me today, I have some wonderful guest panelists. I've got Helena Patience in the room with me. She's my partner at Entreflow, and also my partner in life. That's why we're allowed to be in the same room together. Do you want to say hello and introduce yourself?
Sure. Hi, everyone. As you mentioned, I'm Patience. I'm a CPA CMA. I worked in HR and finance for years before joining 4 years ago. I'm the CEO, and I oversee a lot of the implementation accounting.
Sorry to interrupt, Helena. We're having a bit of trouble hearing you.
Hey, can you hear me better if I'm here?
That's better, yep.
Better? Okay, cool. That mic test before we still went live obviously didn't work. But yeah, I've been with Entreflow 4 years, and I head up the accounting and HR team here.
That's good. Raymond, take it away. Can you introduce yourself to hockey?
Sure. Hi, everyone. Actually, my last name is spelled L-U-K, not L-U-C-K, although I always prefer to be Lucky, as we all do. It's great to be part of this webinar and chat. I'm the founder and CEO of Hockey Stick. I think that Ian probably asked me to be on the call because we are a data provider for private markets, in particular in startups, and the different asset classes from accelerators and angels to venture and private equity. So we're pretty actively involved in understanding what's happening in the market. And we recently launched a really cool resource called Active Funders in Canada, which I'll talk about later. But it's really an attempt to make fundraising a bit easier and more transparent, and it includes kind of a matchmaking system. So I think I'm not really here to talk too much about that, but we'll talk a little bit about the data and the kind of impressions we're seeing from what really is an uncertain market. So nothing is a given. Everything has changed, but it's not all bad news. So I'll kind of leave it at that.
Sounds good. Looking forward to hearing more. Kern, can you say hi?
Yes. Hi, everyone. And Ian, thanks for allowing me to join you guys again. As Ian introduced, I am a commercial capital advisor, part of the Ashdown Group, Ashdown Capital here based in Vancouver. We are essentially a group of finance professionals have all worked in a commercial bank, and I've worked at a commercial bank for over 16 years. And essentially what we do now is we are assisting clients in assisting with finding debt options, whether it's from the big five banks to the alternative lenders to family offices. We essentially sit on the table with the entrepreneur and help them evaluate the various debt options out there available for them, and essentially broker them their best debt deal out there in what's available in the market today.
Sounds good. Thank you. Last but not least, Colin is representing today Startup Vancouver, part of Startup Canada. And we're so pleased to have their support for these quarantine chats. Can you say hi, Colin?
Absolutely. Good morning, everybody. Hopefully everybody had a relaxing and socially distanced long weekend. I know that I finally got out, played a socially distanced round of golf, which is ironic considering I'm in the golf industry now as an entrepreneur and I never play golf anymore, which I was warned of, but I got out, which is good. With Startup Vancouver, as some of you may know, that we are one of over 50 community chapters of Startup Canada, which is the voice of the over 3 million entrepreneurs across this great country of ours. And our why is, as a group of entrepreneurs for entrepreneurs, is to connect each other to all the resources, people, events, both locally, regionally, and also nationally. And being part of this today is just part of all the good things we like to do as being that connective tissue that brings everybody together. So you guys are doing an awesome job, and we're very proud to be part of this. And if people haven't had enough already today, after the hour of knowledge here and inspiration, we have our twice weekly live stream show into the second week called What Keeps You Up at Night? Entrepreneurship During Challenging Times. So in the chat, I will put a link to that if you want to join us for our half-hour show today. So take it away, Ian and Helena.
Sounds good. Thank you. And I'll just introduce Entreflow for some of the new faces on the call, just for context. We're a boutique firm. We're about 16 people, and we focus on helping high growth companies in Canada, typically startups, with their accounting, HR, and marketing needs. Lots of information on the slide. I'm not going to read it. It's not really about us today. We're doing Quaranteam chats to try and support our business community and to provide a forum for expertise and knowledge and for people to chat. If you do have specific questions about your accounting, HR, or marketing strategy, please feel free to ping us. All right, let's get into the news. So we've got, as I promised from last week, we had the BDC co-lending program finalized. Last week I didn't have the details on it. So this week I'm putting them up here. And it looks like a pretty attractive program, actually. So there's different funding tiers that are available for the different sort of sizes of business. But it looks like there's a reasonable chunk of money available. You go through your commercial bank and they're able to top up their loan through the BDC as well. So it's a great way of getting more funding through to the companies that need it. The criteria are basically that you're a for-profit business and have been affected by COVID in some way. But you have to be able to show that you're going to use this money to a good commercial aim. And you'll be needing to prepare all the kinds of things that you would for any other kind of business loan. which we can do some Q&A on a little bit later if you'd like. I've got the links in here. So for CIBC, if you're a CIBC customer, you can go and apply through online banking. All the other ones are saying that you should apply through your relationship manager, account manager, or business banker, or whatever they call it at their institution. And I've got the links in there. The main thing was that this is really for, you should go to your existing bank for this. It's not something that you should shop around banks for. Go to your existing bank for that. That's sort of the main criteria there. Anyone else on the panel have anything else they want to add about this program? I'm sure I'm just scratching the surface.
Yeah, no, you're correct there, Ian, is that this is not one that you go shop around with. You do probably need to go to your own bank first is what the process is, and then BDC will come in at the end with their co-lending option. So definitely speak to your current commercial banker first, and then talk about the program that you want to go into. So
cool. And this is pretty new. It was only finalized in the last couple of weeks. Have you seen any of these applications come through, Kern? Have you seen any?
We are actually doing, we're doing a few. It takes a bit of time. There's a big laundry list, which I think I've shared in a previous seminar that we had, Ian. There's a laundry list of stuff that the banks want to see, and I know that I sort of will share some of that later today. There are some COVID due diligence questions that you need to answer, which cover 5 main areas. So those are some of the stuff that the banks are going to want to see. And the only thing I will also say is that there is a huge influx of volume. So timelines of turnaround is not going to be short. It is a 6 to 8 week process, I hear from some people.
Mm-hmm.
But like
yeah,
you
what
said,
I've seen on my side, sorry to cut you off.
Yeah, no problem.
I think that there's a little bit of confusion, I think, in the market between, the programs that you can apply directly to BDC for, and the programs that are supported by BDC, but through the charter bank. So, there's a little bit of navigation one has to do. Also, I think that, because it's going through the commercial banks, it's not as clear from what I've seen in the criteria that this really does apply to startups. I think that it's a pretty high gate for, when you say revenues under $1 million, but if your balance sheet doesn't look, commercial bank friendly, or, you're not profitable or EBITDA positive, I think it's still going to be a challenge, which is frustrating for, we read the headline and then everyone rushes to their bank and they're like, oh, you're still not really a good fit for the bank. So I'd say do some diligence beforehand. Otherwise, you may be kind of disappointed.
You're very correct on that there, Raymond. This program is more for a business that's probably been around for for up to 3 years, because they would have had a historical track record that the bank can go back from, see that there is a track record of profits are being made. So from a startup perspective, this is probably not the easiest program to get acceptance from your commercial banker.
Cool.
Yeah, and I'm not certainly
that...
complaining about I think the banks are doing the best they can, so it's not a complaint.
No.
On the other hand, I think that the number of startups who are profitable after 3 years is very small.
Yeah.
Mm-hmm. There was a specific question from John on the chat about, is revenue or some kind of measure of traction going to be a BDC requirement coming through for this?
Not right now. I think revenue is part of the equation of what they could borrow up to, but really at the end of the day, it's got to still be able to cash flow.
Mm-hmm. Okay, sounds good. Keep the questions coming, by the way. If there's any others as they go, then type them into the chat. Okay, so here's the bad news, guys. So Stats Canada released some recent survey data that indicate your eyes, I'm sure, will be taken over to this graph, percentage of businesses that reported layoffs. So it was a whopping 45% of businesses reporting layoffs. And the survey was open for a good chunk of April. So we're seeing a lot. Notably, I don't see tech on here on this list. It seems to be sorted by from highest to lowest. So it may be that tech is on the list just further down. But we're seeing, a lot, the average being 45, and obviously certain industries are a lot higher hit. Yeah, for sure. This also doesn't say how much of a layoff it was. It could have been one person out of 100, but just that there was some layoff in there. But it does speak to the fact that this is something that affects a lot of businesses. So it's a far-reaching impact. And then on the revenue side of things, we had some data reported that almost 33% of businesses lost more than 40% of their revenues, and an additional 21% lost at least 20% of their revenues in that period. So quite a hit, guys, that their companies in Canada are taking. So, but let's look at some good news. I don't want to stay on that slide too long. Let's look at the good news. We had over the last week a vaccine go into phase 1 clinical trials and some positive outcomes. So antibodies being produced by the patients in that trial. So that's it's only phase 1. So if you're not familiar with clinical testing, there's going to be a phase 2 and a phase 3. Before a vaccine is released, and then of course they have to figure out how to produce it at a lot higher scale. So we're not at the end of this journey yet, but it's looking like we've got some positive news and some good progress there. So the other thing was that in our Canadian, so Moderna is a company in, I think it's Massachusetts. In Canada, a group out of, I think it's Dalhousie, certainly somewhere in the Maritimes, had a candidate vaccine trial approved. So they'll be going into clinical trials coming soon. And the Chief Public Health Officer of Canada, Theresa Tam, reported that 50% of COVID cases had been recovered in Canada. So all good news, and the stock markets went up. I think the Dow Jones bumped up about 900 points on a day. And that affects businesses too, because the more investor sentiment is good, it means that there's more liquidity and more movement in the markets, and so that's going to hopefully have an effect on our Canadian businesses who are looking to raise some monies.
Another piece of positive news as well, just with my other accountants across the country, it looks like a lot of businesses are starting to get their first CEWS funding in last week and this week. So if you applied for the CEWS, that's the 75% subsidy, wage subsidy, that those payments are starting to trickle into people's bank accounts now, which is great.
Awesome.
And yeah, one thing to add, I think it was on Baitica today. They've also expanded the eligibility criteria for the CEBA, the 40K loan. So I have a feeling it's going to keep expanding. So it's not the end of that, but I think that my understanding is that includes more small businesses that are kind of sole proprietors that pay through dividends, that have contractors, and I think that probably applies to the earliest of startups. So that's good news, I think.
Yeah, for sure.
Sounds good. Love to hear it. If anyone else any attendees have any positive news they want to share, we'd love to hear it. Right? Let's stay positive here. Okay. So this one is just some top tips, some things for companies to think about. Can you take us through what you think? Go ahead.
For sure. So now is obviously a good time to focus on your profit over high growth, unless of course you're in an industry which is doing very well because of this, which is the case for some businesses. So now's a good time to take a step back and see where you can help to improve your business, especially on the profitability perspective. Also, planning is really important, and I think we've talked about planning a number of times over the course of our Quaranteam chats, making sure you've got a good short-term plan, a long-term plan, and not only from a profitability profit perspective or P&L perspective, but also looking at your cash position. So with the funding available, especially because a lot of them are loans, that's going to come back at some point. You're going to have to pay it back. So be it the CEBA or the maybe if you get co-funding from BDC or what have you, you have to pay the piper at some point. So make sure you've got a good cash forecast in place to figure out how to manage that. As well with the CEWS, if you're getting the subsidies, At some point that's going to turn off as well. I think they're extending it to August at the moment, but we need to make sure that we can still survive what we're doing and all the programs we have in place within our business. Once that turns off, it's going to be a bit of a hard hit in September. I'm not looking forward to September at this point, to be honest, when reality kicks in. But for all of our businesses that we support. But in any case, but yeah, just make sure you've got a good plan in place so that's not a shock to the system. And then finally, your risk management is super important. Right now is a time, to just focus on what can you do to have a good looking, healthy company. You do what you know is profitable and safe at this point. Make sure you understand your profitability really well. Do you have services or products that are doing better than others? Focus on the good ones and to really stabilize and safeguard the business as much as you can, because we don't know how long this is going to last at this point. And so we want to make sure that your business is in as healthy a position as possible.
We're going to talk a little bit more about risk management stuff in future quarantine chats. We talked some about it before, but it's things like making sure that you have multiple revenue streams, definitely a really good one. So if one dries up, being able to address more than one market segment, certainly a good one. And we're going to talk about cybersecurity too, because the CFO perspective on cybersecurity is actually really interesting. So we're going to bring in some cybersecurity people to talk about that coming up here. So actually, I'll pause there, and I just want to give any of the other panelists or any attendees an opportunity to jump in on this. Any things that you want to say or recommend. I'll go to you first, Raymond, because your microphone is unmuted already.
Thanks. Yeah, I think for those of us who've lived through a down cycle maybe several times, and that comes with age, unfortunately, I think the one thing that you can control is expenses. So I think that, especially since we all, have lived through kind of an up market, especially with respect to capital and venture capital and being in kind of startup land, it's very easy as a founder to convince yourself that there's certain things you cannot do without, like office snacks and this and that. And I think now is the time to answer that question, and many things you actually can do without. For us, just to give you an example, we were at 111, and we learned that we could do without our office space entirely. So I think that long term we'd like to have an office, but I think it's permanently changed our view of the value of an office space for us. I think it is valuable, but just how valuable is really becoming apparent now that cash flow can be used for lots of other things. So I'd say, for anyone who's gone through it before, the standard things are, and I was looking at a survey from the United States about this, that I think 50% of founders and startups are reducing office space drastically, including going completely virtual, reducing marketing spend, and deep freeze on hiring, and other things that you can do. You don't know that you can do it till you've tried it, which is try to get paid faster and try to pay slower. Not Entreflow. If you work with them, of course, please pay them first. But it's a simple thing that if you owe somebody money and you, of course, you should pay them, but people do understand now that you need to be a going concern in order to pay that. So it's amazing how far you can get just by giving that a try.
Very good, thank you. We had a couple of comments on the line. So Raheem mentioned about the RRRF. There's so many acronyms out there. If I remember rightly, this is the Regional Relief Recovery Fund. Oh, if I got that, please give me a prize, because there's. But yeah, I've heard of this one, Raheem. If you wanted to share about this one, then please let me know. We can unmute your mic and you can tell us about it. What I remember is that this is for businesses that are outside of urban centers, and it may be connected with WD. So that's sort of my recollection on it. I didn't prepare any notes on it. Okay, Raheem said sure. Aislinn, can you unmute his mic so we can hear from Raheem?
Hi there. Yeah, thanks for having me on here. This was announced just last week or the week before. It was just a part of the um, federal government allocating regional authorities more funding. And so, for example, I live out in Alberta, and so Western Economic Diversification is funded a little bit more. And so they can actually offer loans that are reasonable for companies like mine, which is Fluid Biotech, which is a life science company in pre-revenue. And so it is a way for companies to overcome some of their operating costs without, in terms of a little bit of a short-term cushion here for the next 6 months. And so it's a good opportunity for companies to, at least to get a little bit more set on their finances and their cash flow for the next 6 months to year. And again, for us, it's a way to get a little bit more cushion in light of the funding. If you're going to seek out equity funding and raising money, it's a little bit tougher now, and it's going to be delayed. So this type of loan is a little bit more easier to get and to help overcome that delay of financing. So it's basically bridge financing. The terms are very, very good. So I encourage everyone to go and look it up. It's each regional authority will have the same type of opportunity.
Perfect. Thanks so much, Ricky. We'll make sure and look that up and then post a link to it in the summary page for this chat when we're done. Nope. Okay, moving on. Let's get into the data. So some of the data is a bit sparse, so I have to warn you on this. It's not like we're going to have lots of fancy graphs and charts and things, but we do have some, and we can talk a little bit about it. Some of it is informal, some of it is anecdotal, sentiment kind of stuff. But the more we ask the questions, the more we get answers. So first things first, I thought it might be interesting to do a little bit of a poll and see what we get back here out of this small group. So this is actually the first time that I've done a poll on Zoom. So you'll have to forgive me for stumbling through this. Okay, so talk amongst yourselves. How do I even do this? I don't know.
Aislinn, are you able to guide us?
I think, yeah,
launch it, Aislinn?
I think Aislinn has to launch the poll because she's the host.
Yes, I do. And then I have to edit which questions you'd like.
Okay. So it's the second poll. The one about, can you get in, can you open it up and launch the poll, please?
Yeah, poll 2 funding plans.
Yeah, please. Yeah, go for it.
Okay, that is launched.
Okay, sounds good. So it should be up on your screen. Can you give us a little thumbs up if it's come on your screen? Yep. Okay, good. So so please answer these questions. Hosts and panelists can't vote, unfortunately. So if you're some of these questions they may not perfectly apply to you. So for instance, I know that Chuck's on the line, so he's probably not raising for himself, but maybe if you want to answer for somebody who is raising or somebody who is looking for investment or debt, and you know some of the details of that, then feel free to answer that way, and then we'll see what we get. So Aislinn, we'll have to let this run for a minute or two until you see the results. Mm-hmm. And then I think you have to close the poll, and then we'll be able to share it either live here, maybe, or towards the end when we're done. While we're doing this, looks like John from Whatify said he wants to do a shameless plug for Whatify. It's a really cool tool, actually. So I am gonna give him a chance to speak. Aislinn, can you open up John's mic? And John, can you just give us the 1 minute condensed version of Whatify, and then we'll share it out.
Yeah, sure. Can you hear me okay now?
Yeah.
Great. Yeah, so early stage tech startup here. Whatify is a financial scenario planning platform. Big difference is we're very visual. So if you're familiar with lucid charts or any kind of mind mapping type interface, you can connect all of these dots together to map out visually financial scenarios. We're initially a financial advisor tool, but we're getting a lot of feedback that we could be valuable for small and medium-sized businesses trying to figure out if they go left, if they go right, if they go up, they go down. So I'm looking for some companies that have reasonably straightforward cash flow type of scenarios, and I'd love to test our product if anyone is game.
Cool. Sounds good. Thanks, John.
Thanks.
Aislinn, can you see if we've got some answers in there?
Yeah, looks like we've got a pretty good poll happening.
Okay.
You want to
Sounds
work
good.
on this data?
Sure. Why don't we close that up, and then are you able to share it then?
I'm not sure. Oh, share results. Yes.
Okay, there we go. Great. So it looks like most people nobody's looking for a bigger amount. So not really surprised there. I kind of thought that there was going to be more people holding off on plans, but it looks like more people are actually, yeah, still going for it, but just maybe a small amount. So that's interesting to see. And as expected, most of the people on our call are in the earlier stages of their funding, so that's great. And this is a real surprise to me. This last one about the level of interest in investment generally being the same as it was before. That's very cool to see. I was expecting to see that it might be the same from a different set of investors, and nobody picked that one. So that was the dummy option. Very cool. We'll share out the results of this one after we finish this guy. And Kern had shared some survey results from a previous webinar, and I'm wondering, Kern, if you can talk us through this one.
Yeah, thanks, Ian. Yeah, so I was part of an Association of Corporate Growth webinar last week, and I guess there was some industry professionals from National Bank and EDC on the line who provided just some intel of sort of what they're seeing and talked a little bit about what they see down the road in the 6 to 12 months. But as part of it, they did do some polling amongst it, and generally the people that were on the call were mostly finance professionals, CFOs of small to medium to enterprise businesses. And there was just really 2 questions that they asked us. And the first one that you see on the screen here is, what does your company need to raise in capital for the next 12 to 18 months? So mostly, and which is kind of where the banks are focusing, is mostly companies are looking for liquidity and working capital just to maintain the business. So that's really where the focus is on a lot of finance requirements on businesses in Canada. You'll see organic growth has a little bit in acquisition, and other is a much smaller component. And talking to banks right now, you know, if you're looking for an acquisition right now, it's not really high on the bank's priority list unless it makes a real compelling reason why they should support you. So this slide is just indicative of sort of what businesses in Canada nowadays, this ACG event was across the Canada. So it's showing a cross section that, you know, 57% of us are just really looking at trying to maintain our business with liquidity and working capital.
Sounds good. And the next one.
And the next one is sort of, what forms of capital are you most interested in raising in the next 12 to 18 months? So, you know, with all the government assistance out there, it does look fairly balanced between 3 options. Obviously, one is the government assistance. That's probably where most of the hospitality businesses are going at right now. Senior and traditional lending is more of, if you've already got existing borrowings with the bank, the banks are going to continue to help you. Many banks have sort of an automatic 10% bulge that they can provide you in senior debt working capital options. And then the other 30% is sort of in your equity space, which I think Raymond could talk a little bit more on, sort of, you know, where is that 30% coming from and how are they sort of providing it to these people? And then obviously 8% in that sort of sub to mezz junior debt, which would be an arm that BDC offers as well, which they have sort of a sub debt branch, which they tell us it's busy, but there's a lot of parameters that they're looking for before they're sort of willing to throw money out the door. So. But these were the 2 questions.
I'd say that if
you know if this has changed. So, I mean, obviously a lot more people going for government assistance, but this balance of traditional debt versus equity, has that changed?
Are you asking me, Ian?
Yeah, yeah. Sorry, Kareem. Go ahead.
I would know more on the debt side of it. Equity, I'm not quite sure, and that's probably where Raymond sort of could jump in.
Okay, go ahead, Raymond. Jump in.
Well, I was going to say for for the seed and kind of pre-seed folks, I think the idea is just do it in the order of that it's listed here. In a way, you start with government, and it's kind of table stakes. Like you have no choice but to absolutely maximize every cent that you can get. Every person that can get that 40K has to get it, right? Because you'd be foolish not to. It's a 10K grant. It's et cetera, et cetera, cheapest capital you ever get. So every founder has to become an expert in government grants, and there's a downside to that. The upside being free money, which is a very big upside, but the downside is that it's I actually think that the evolving nature of the government assistance programs, which is not a criticism, it's just that's a reality of the complexity is it's slowing down the equity market because people are uncertain about let's wait to see what the government does before we fully commit writing a check. So I think you going back to what I said, you should start there. I think a lot of people in specifically in tech startups, so not every SME I'm talking about, have in the past somewhat turned their noses up at debt, whether it's shred lending or revenue financing or even venture debt. There is a growing trend, I think, of people starting to realize that it's a really valuable source of financing for a lot of tech businesses actually, but it's generally been kind of looked down upon, and this idea of that it's more risky or so I think maybe it's just a lack of understanding of the finance there. And then in terms of equity, it is we're certainly seeing that the earlier the angels, what we've seen both in the US and I would imagine here, we have more data from the US, is that the good news is about 60% of angels are saying that it's business as usual. They're still investing, but probably about 50 to 60% are saying they'll write smaller checks and there'll be lower of evaluation. So those two things tend to be related. But I think that if you're out there and you're raising, it's it's going to take longer for sure. So that changes your fundraising strategy, and B, you should just expect I'd say at least a 30% drop in valuation, and TBD that could go lower depending on your business and the economy, but 30% right off the bat is what we're seeing.
Very cool. Thanks for those comments. I just wanted to share some of the magnitude. I'm typing and talking at the same time. Never a good idea. So I wanted to pull some numbers. This is again from Stats Canada, just to look at what the Bank of Canada is doing. So how is the government getting money into the market? What's the magnitude of that? So I pulled this report this is the Bank of Canada's balance sheet, and we can see this uptick from the end of March. So I thought, well, that's interesting. That they've increased quite substantially on that. But let's look at that in context, guys. This is that same graph, but now spread over a period of years. And now we're seeing these lines, yeah, they're going up, and then wham, straight up in the air, these guys. So that, what looks like a modest increase over the period of months, is an extraordinary spike if you look at it in the context of years. If you look over here, what was that? That was our practice. Yeah, that was 2008. That was quantitative easing and all that. That was our practice run for this guy, right? So the other stat that I saw is that the response has been 2 or 3 times the response to the 2008 thing. So just interesting data. So this is where money is coming from and how much there is. Another one is looking at the chartered banks. So of course, your CIBCs and RBCs of the world and what they're doing. And so I focused in on business loans. Unfortunately, they only report every month, and their reporting period ends at February. I really want to see this chart after March, April, May, But so far we only have the end of February, and it is a bit of an uptick. But if you look in the context of over the course of the years, it's an uptick, but not extraordinary. I'm wondering if this end of the chart will go way up over here as money starts to flow through them. So that's something to keep watching. That's oh yeah, okay, and then some more stats on the number of CEBA loans. So RBC saying they've done 60,000 of them, CIBC projecting 200,000 of them going out there. Those are the this is not formally reported, this is just anecdotal stuff that we're seeing out there. So lots of money coming in. Okay, and I don't have current data on what's flowing through angels and VCs, but I pulled some of Raymond's old reports for what's just to set the context for what has been funded through these kinds of groups, to set it in relative context. Okay, so I'll pause there and just see if Raymond, if you want to add anything to this, or Kern. Sure.
Yeah, so I'll maybe add a couple of things just as you're talking. That one, not related to this slide, so I'm doing a bad thing by not actually speaking to this visual. But it just popped into my head when you were talking about the previous slide about the overall economy. That
I'll go back. Yep.
Yeah, that one very interesting statistic or data point that I've seen through this really great NXT venture capital survey. They surveyed founders and VCs. I'll post it in the chat after. And one really kind of interesting / scary number is that when asked when they thought the economy was going to turn around, kind of back to normal or post crisis, two times as many founders said that was going to be July to September of this year, and 2 times as many VCs said it's not going to be till next year. So there's like a 12-month gap in I guess it's an optimism gap, which makes perfect sense. I mean, I'm a founder, I'm always optimistic, but I think that if you are out there fundraising, you have to be aware that there's quite a distance between your optimism and the other side's pessimism, particularly when it comes to equity. So when you're projecting your growth, the average equity investor, in particular venture capitalist, is thinking more conservatively, and they're more doubtful that everything's going to be back to normal in the fall. So if you're pitching that, yes, it was a brief spike, but now we're not working from home anymore and it's business as usual, unless you can prove it, be careful, because most VCs don't believe that. And who knows? I'm not saying they're right, by the way. Who knows? Like we'll see. The other thing in terms of, because we're about to release some Q1 numbers in the next couple of weeks in Toronto and Montreal. We're covering Vancouver the quarter after. And so far, if you look at both the venture capital numbers, which we help produce for the Canadian Venture Capital Association, and also for some of the city data, which we're been the first to produce, there was not a huge drop in the Q1 for equity funding. Part of that's because the kind of the big impact of COVID-19 didn't really hit till mid Q1. But I think that people have to remember that things didn't drop off a cliff, that still many deals take months and months and months to get queued up. And I'm not hearing that those are going away. So I think that, Q1 actually was a small drop year over year in let's say Toronto, for example. And a bigger drop from Q4 to Q1, which I think some people misinterpreted that as, oh, that must be COVID. But there's always, Q4 tends to be bigger anyways. So I think that there's still quite a lot of equity in Canada. I think Q2 will be more interesting to see that gradual slowdown. I don't think it's enough for entrepreneurs to stop raising because if things are going to take more time, which is, I think that's guaranteed, then you could argue that even if you weren't planning on raising, you should start now because it's going to take you longer, right? So it's almost logically everyone is raising now because it may take you a year, and in a year you will be raising, so you might as well start now. So I think the question is, what's the best approach in a market or in a kind of economy and kind of a societal situation we're in, that You're not hopping on a plane, going to visit a VC, shaking hands, doing all those things you used to do. I think that although VCs don't want to get cold emails, but I think the reality is that there's going to be more digital kind of communications. There's our site, Active Funders in Canada. There's others that are trying to kind of broker, and I think that's going to grow just out of necessity, that you just don't have the same kind of warm and fuzzies that you used to do. So overall, I'd say get started early and use data, use platforms as much as you can, because no matter, I think there's some pushback from the investment community that it feels weird to go online and make a deal, sight unseen. But we just hired 3 people we've never met, so we didn't think we were going to do that either. So it's a great time to change.
I think that's a perfect segue, Raymond. If you wanted to show us the active funders, maybe I can pass the screen over to you,
Sure.
and you can do that. Okay. Oh, I had to show you the ridiculous spinning cat because I wanted to make you laugh.
If you've got that hammer, you might as well use it, right?
Yeah. Okay. Out of the way. Aislinn, can you make Raymond the presenter so he can share?
He should be able to take over screen.
Okay. Yeah. So I am taking over. By the way, this was if you're seeing this was the quarterly, the preliminary venture numbers. So it doesn't include angel, but you can see in Q1 2020, it seems like a drop from Q4, but compared to Q1 2018, it's in the ballpark. And there's fewer, the small enough number of Canadian deals that I wouldn't read too much into it. So Q2 we'll see, Q3 we'll see, but there's still quite a lot of deals being done. So the site I've been talking about is this kind of free open source resource that we created. We're trying to leverage the relationships that we have with funders and the data we have about funders. So if you're looking for equity or debt, the government programs, I'd say there's lots of sources. So I'd say this is becoming somewhat commoditized, which is exactly the right thing to do. But on the equity side, it's a list of funders that what we've done is we've actually communicated with a lot of funders. And maybe this is a bit less relevant in May now, but in March it wasn't necessarily. My dog is just loving what I'm saying in the background, so he's my biggest fan. So it wasn't as clear that angels and VCs were going to be just as active in business as usual. That's more clear now that we're seeing it. With lenders, you can surf this kind of, again, I'll post this in the chat. But the kind of cool thing we've done is if you want to, you can reach out to people directly, but we will actually introduce you. So there's a very simple kind of kludgy form you fill out, and you put in some information about your company. We often have quite a lot of information about you on Hockey Stick, and we use that to maximize our match. But we've made hundreds of introductions since we launched this, and whether it's intros to partners at a venture fund or to private debt fund or something like that, we see our job as just making the connection. We hope they're consummated and capital is flowing, but I think that in particular in the equity side of things, it takes time. It's not, hi, my name is, and then they write you a check. It may be a 6 month, 1 year long process, but what we can do and active funders can do is make that intro. So it's a cool system because it sends a package of information to the investor. They can decide who they'd like to connect with. So it's very light touch and kind of confidential, but it's worked really well because it's curated. There's some smart kind of matchmaking behind the scenes. And our goal is, we know that if we send out 100 matches, if we can get 40 or 50 that actually happen, that's an incredible batting average. So that's kind of what we're tracking to. And this is growing. I think you can see there's by about 250 funders now. And it's free. You can, you also get a free Hockey Stick account, which gives you access to the largest funding database in Canada. So this is a this is a resource that I think people should use, because as I was saying, in an environment that it's going to take longer to raise and you have to be more intelligent, whether it's hockey stick or Google or any other source you want to use, being educated about who your funder kind of target is more important than ever. You have one chance to make a good first impression, and knowing the portfolio of a fund, knowing the other investments, knowing whether there's a competitor in the fund, knowing the partners and what they've invested in, it's very easy to do on hockey stick now. And again, those are kind of table stakes that it's kind of expected that you know that before you pitch, because you're not going to have as much time to build relationships. So whatever you learn is going to have to be reflected in your pitch deck, in your intro emails, etc. But what we're seeing, that probably the most interesting kind of byproduct of this is just seeing that there's so many investors on the equity and debt side who are not only responding to this type of introduction, but they're saying, keep them coming. We want to be active. We want to, in some cases, increase the amount of investment we're doing. So I think, after we're all finished talking about government handouts, I think, it's great to know that the private markets are still there and still doing business.
That sounds really good. I like hearing that, because it means that there's these optimistic founders who are looking for investment, have people to talk to that are interested in having a conversation. I mean, it might take a little while, and there's some uncertainty there, but certainly there's pathways paved. Oh yeah, exactly. No, that's really good to hear. Have you found that in your conversations with these folks that they're changing their sort of ideal deal, the size, the type of company? Have you felt that has changed?
Yeah, I mean, it depends on the type of funder. I think lenders are generally being more aggressive. Unless you happen to be funding, a particular, let's say you're funding e-commerce, and e-commerce is really, dropped off a cliff for a little bit. But generally people are expanding, but they're also, but that doesn't mean it's easier. It may mean it's harder, because there's also a flight to quality. There's more capital there, but they can also afford to be a bit pickier. So whereas before they were looking for 6 months of revenue, now they look for 12. So I think that, if it's mostly a seed and early stage audience, you really have maybe two options in, minus BDC and those programs. It's really SRED financing, which is something that I think everyone should, can take advantage of and take advantage of that program. And the other is, if you have recurring revenue, let's say you're a SaaS company, and I think you've got a minimum, let's say $15K in revenue, there are revenue financing companies that'll, the standard kind of royalties. Beyond that, your P&L and balance sheet won't really qualify you, unfortunately, for a lot. So I think that lenders are pretty active. On the equity side, it's just lower and slower. So lower check sizes, lower valuation, and slower process. So all bad things if you're a pilot, and not so great when you're raising money either. But I'd say that yes, it's bad, and things take longer, evaluations, and it's all bad. But partly as founders, it's always bad. Like, that's my response to this whole thing is yes, it's bad, but it's never easy. It's never, no bank is ever calling me up and saying, I'd like to offer you this incredibly, a favorable loan just because I like you and you're a startup. It's always difficult. So, if you keep your burn rate down and you hustle and you treat fundraising like, hiring or like anything else, it's like a job, like sales, then, you have no choice but to get through it, and you will get through it. And it's tough, right? But it's tough building. It was tough building a business 6 months ago. So, sure. It's tough now as well.
Okay, I'm going to take over, back to sharing my screen. And I think we answered most of those questions. There were a couple of other questions that came up on the line while we were talking, so I want to make sure that we get through to those as well. There was a question about raising in different regions. So do we have a sense if Americans or Brits or European or Asian angels or investors are acting the same way? Do we have a sense of that?
Well, some of the sentiment, I mean, most of the sentiment data that I've been able to access to is American. So the European, I'm not sure, but I think that I think that I think it's the same everywhere, which also means that in Canada, when valuations dropped 30%, it was already 40 or 50% lower than the United States. So
Yeah.
those same kind of differences apply. I don't know. I mean, there used to be this thing that if you don't have a local investor, we don't really want to talk to you. That was already changing somewhat, but I wonder if that will change now that now that we're all socially distant. I wonder whether people will be more like, well, if we can't really be all local, we might as well be more open to Canadian companies. But I think generally it is tough because if you reach out to, let's say, Boston or New York or Silicon Valley investor, their big issue is they don't know you. So they typically, the way they would get to know you is asking 5 other people they know that know you. And how is that going to happen if you've never been there or you don't have a network? So I think everyone's still navigating that. I think that in general, I always tell people that the best way to get the best deal in Canada is to get a term sheet in the United States. I wish that wasn't the case, but that's still the case. So I think raising money outside of Canada is a good idea no matter what. So you might not be able to do it, but you might as well try. But I don't think there's anywhere in the world where angels are completely contrarian to the idea that because angels are individuals, so they have optionality. They can decide not to invest, and it doesn't really affect their lifestyle. A fund is different.
Okay. We had another question about what do you think about holding off on doing a seed or angel round if you don't want to take a drop in valuation? What do you think there?
Well, just don't run out of money.
Just don't run out of money, yeah. But well, maybe that's where you go and explore some debt options first, right?
Yeah, I mean, I generally don't think that unless you have a more mature business where you really believe in the fundamentals. For a lot of startups, valuation is a bit of a who knows anyway. So most people don't have a really clear understanding of what valuation means. Just higher tends to be better. So I think that if you're in that position where it's you don't really know, but you like a higher valuation, then I don't think it makes sense to hold off. If you're a business that's profitable and you're not getting a multiple of revenue or something, that's different. But then just like you said, you'll have debt options.
Sounds good. Okay, unfortunately we have to wrap. I could talk all day with you guys, and I'm sure that we'd get more questions on the line too. I'll put up everyone's contact details in just a second so we can carry on the conversation offline. What I wanted to mention is some events coming up. So in this same series, the Quaranteam Chats, next Tuesday, we're going to have Dr. Natalie Chan from Be the Change. I'm very excited to have her on. She's been working and has lots of great info on policies for bringing workers back into the office. A lot of companies looking to make the change. Maybe start introducing some people working back in the office or in the workplace. Really excited to have her on, and that's going to be co-presented with Spring. So we're going to have Keith Ippel on that as well. So a merry old crew for that one, talking about some HR issues, and that's going to be fun. We had talked about a cybersecurity and remote working. So there's the HR perspective and the CFO perspective, and we had a cybersecurity expert lined up for that. But then we had a little bit of a scheduling conflict. So I'm hoping that'll be the week after, but we're just sort of trying to put a pin into the date for that one. And finally, as Colin mentioned, in about a half an hour, we're going to have the What Keeps You Up at Night with Colin and Startup Vancouver. So into that, he's already put the link in the chat. Scroll up towards the top, you'll be able to find that one in there.
Thank you, Ian, for that. Appreciate it.
No problem.
And we do it on Thursday too. Tuesdays and
Yep.
Thursdays at 12:30.
That's right,
Awesome.
2 days a week. Okay, so I've put everyone's contact information up there. So if you're perhaps looking for some debt, Ashdown Capital is a great first conversation to have. And if you're looking for those kind of connections or information or data, then highly recommend our lucky Raymond Luck. Sorry for the typo again. And Hockey Stick, and we've been looking at that the tool, and we're actually Hockey Stick subscribers ourselves, because we often, as an accounting and CFO firm, have people asking us about who would be good investors. So it's a resource that we use and recommend. As always, feel free to reach out to Helena or myself if you have specific questions. We'll be happy to help you. And we will leave it there. Thanks very much, everyone, for joining. Please join us again next week. And if you liked what you saw, share it around with everybody. We're trying to support as many people as we can through these interesting times. Very much appreciate our panelists for joining. And again, Startup Canada, thanks so much for supporting what we're doing here. So
Absolutely.
I'll leave it there. Thank you very much.
Thanks, everyone. Thanks, Ian.
Bye-bye.
Thanks, Elena.
Thank you, guys.
Take care.
Thank you.
Thank you.
Bye-bye.
Bye.